Saudi Arabia pulled the rug from the market today. We free fell until they had to halt trading for 15 minutes. We've had 3 stoppages in the total market. When we're down 7%, it's a 15-minute break. When we're down 13%, it's another 15-minute break. And if we go down 20%, halted trading. So that served its purpose. We hit the 7% mark. We didn't really fall a whole lot after that, but we didn't really gain either. It kind of just left us there, down 7%. Everyone's going to figure out where this price is. Where is the market supposed to be? We've been, selling down. So when does it stop? Where's the floor? Well, I don't have the audacity to tell you that I know where the floor is, but we're just going to cover what the basics are, what's going on right now, and how we're going to approach it into the future. So what's going on with oil? What happened with Saudi Arabia? What happened with Russia? Both these countries, they're very dependent on oil. They get a lot of money that way. Russia, huge oligarch issue. Vladimir Putin's best friend is the CEO of the largest oil company. And he's not happy that Trump has made America so energy independent. America doesn't have a seat at OPEC. Last week, there was a big OPEC meeting. We reviewed it in the past couple of videos. Big OPEC meeting, countries like Russia, Saudi Arabia, OPEC producers, oil producers. And Saudi Arabia was trying to create a plan for everyone to cut production. Coronavirus is going around. People aren't traveling as much. People aren't using as much oil. So in order to keep the price, which has already been hurting because of all this, up, or at least where it's sitting was sitting right then, we got to cut production 1.5 million barrels a day. Russia said, nope, Saudi, we're not doing that. Vladimir Putin's like, we're going to help the oligarchs. Saudi Arabia says, you, and they up production. And now there's a massive supply surge in the market, and that sent prices down. And the market, nothing's like this has really happened, at least that I know of, reacted with uncertainty. Where's the floor? What's happening with this? Why is there so much uncertainty? Where are all of these geopolitical issues coming from? Out of the blue, it's like we're getting right hooked every single time. Well, hold on, market, Mr. Market. Let's calm down and take a look at what's actually going down. So oil's getting cheaper. What does cheaper oil mean? Cheaper energy, cheaper gas, cheaper products, cheaper expenses. Energy is a huge expense. That's why I'm so bullish on renewable energy. It's economic crack. It's renewable energy. So cheaper energy is good for the consumer. Now, where's this a problem, though? America has a lot of energy companies, and it's very expensive relative to Saudi Arabia to produce energy in the United States. We got to have these nice fancy drills. Cost a lot. Got a lot of jobs on the line. But President Trump is very nationalist. And if there's going to be thousands and thousands of jobs lost from energy, which is, South Dakota, all those states that have a lot of energy that are definitely Trump states, we're probably going to implement some sort of nationalist policy. Like no buying Saudi oil, no buying Russian oil, only buying American oil. So that would kind of set some sort of price floor, which would allow American energy companies to stay afloat because a lot of them have a whole lot of debt, and keep the oil jobs in place, which is going to be good for the economy. So market was down 7% today. That's a huge sell-off on oil uncertainty, which won't have a negative effect, at least in my opinion, in the United States. So what does that mean? It means it's time to buy. Now, what's my buying strategy here? I've gone over it a bunch of times, and it's not going to change. You nibble on the way down. So if you had 60% cash today, if you were 40% in equities, 60% in cash, you might buy an additional 20% worth of stocks. You nibble on the way down. Nobody knows where the bottom is. I don't know where the bottom is, and I spend 4 to 5 hours a day at least listening to the news, CNBC, straight. I don't know where the bottom is. You don't know where the bottom is. Warren Buffett doesn't know where the bottom is. But Warren Buffett said at the very beginning of this, when his interview was literally the first massive sell-off, the day of the first massive sell-off of coronavirus, Warren Buffett was doing a live interview in the morning. You know what he said? Just buy. Just buy. Obviously, those of us that aren't as rich as Warren Buffett, we got to wait a little bit. We can't get run over by the sellers, but the sellers have had their run. They're going to be running out of steam soon. And today, I think they went a little too aggressive. It seemed like too big of a move for me. You got to be buying on these dips. You got to be getting back into the market, enjoying the Black Friday discount, because jobs haven't been affected. Incomes haven't been affected. That's not to say that there's going to be some sort of effect from coronavirus, and that's where the uncertainty lies. But the economic fundamentals remain strong. China's getting back online. That whole issue is going to be fixed. Supply chains are going to be back in order, and they might even be better. They might be being brought back to the United States, making American consumers stronger than before. So there's a whole lot of reasons to be optimistic. There's obviously some fear-mongering headlines, which are throwing the market out of whack, and a lot of them are warranted. Remember, I was saying coronavirus is not being factored into the market. Now it's being factored into the market, but it's being factored in too much. At least I think, at this point. I think we're at, maybe not too much, relative fair values. We were very inflated before coronavirus. That's what's made this sell-off so aggressive. But there's 500 cases, probably slightly more in the United States. It's got a 3% death rate. Most of those deaths are in elderly people who aren't really consuming a lot, and they're just naturally more susceptible to this. So it's just kind of like a flu. It's just kind of like a normal virus that people get that's part of being a living organism, except it's unknown and we don't have a vaccine. But we're going to have a vaccine within a year. So that kind of leaves a cap on the whole coronavirus thing. So this is not from coronavirus. This is not from even just oil. This is from uncertainty and reaction. This is uncertainty and reaction by Mr. Market. And our job is to take advantage of Mr. Market when he's playing dumb. When he's not doing his job, when he's not on his game, we make good deals with Mr. Market. And Mr. Market is giving us all the good deals on sale right now. So we got to be buying, right? We got to be buying the market. So whatever you've been looking for, whatever your favorite stocks are, you got to be making those moves. Probably got a better dividend, definitely at a better price, 20% off from where you were buying it 2 weeks ago. So, the economy's feeling strong, the market's feeling a little uncertain, and there may be some room to go down. So we don't buy in chunks, we nibble on the way down. A little bit here, a little bit there. This position fell farther down than the market. Let me go into that. Just nibbling on the way down, on the way down, on the way down, on the way down. So 2 years from now, when coronavirus is a thing of the past, when oil prices are whatever, when we have renewable energy, and the economy is back up and strong again, and the markets are living on that high, we're all chilling. And we've all got our money. We've all got our stocks that we got on sale, and they're all paying dividends if they pay dividends, but they're worth more than when we paid for the stocks. And now they're on sale, so we buy them now. I can't stress that point enough. I hope you got that. And if you have questions, DM me. I'm managing people's money now. So if you have $5,000 or more and you want to take advantage of somebody who's following the markets all day, who's been doing this for several years, whose opinions you like, if you don't agree with my opinions, if you haven't seen the results they produce, don't invest with me. Go back to the videos, decide what you think. I don't want unhappy customers. I want to deliver you results. If you want to be a happy customer, DM me and we'll get going. All right? Sounds good. Peace.